Yeah, so in such scenarios, that is where you also have to use the 4 hour. So that is why we all have to be very flexible with the time frame. That is why it is called top-down analysis.
Yes. Wait,
Yeah.
can you do me a favor?
All
Can you
right.
like list in steps and that will help me to remember like when I'm going to a chart, I remember like this step all the way down to my entry, like what to look for, like step one, you know,
Okay.
what's the
Okay.
market structure. Can you do that for me?
All
You
right. All
know.
right. Okay.
Yeah, you can send it to me sometime tomorrow or whenever. Yes,
Oh,
they,
okay.
I
All
mean,
right.
that would help. That would help me a lot, and I remember those steps. And then when I'm looking at the chart, I know, you
All
know,
right. Oh, all right.
from
All
one.
right.
Yeah,
Okay.
yeah,
It's not,
like with the liquidity grab and all that, change of character. Then I know I follow the steps all the way
okay.
down to my entry.
All right. It's okay. It's not a problem.
Yes.
Okay. All right. So, we're just going to now, okay, let me begin with something. Let's say, okay, let's look at this particular, this is gold, and this is from the weekly time frame. We're together, right?
Yes.
All right, what you can clearly see is that gold is in a bullish market condition because you can see the structure is trending to the upside. And this is where we actually had the last structure point formed because what you can clearly see here is we have the fair value gap. We have the fair value gap here from the weekly time frame.
Okay.
Yeah, as the fair value gap, let's clearly identify that. So you can see because from the candle wick high here to this candle wick low point, that created the fair value gap. And we can see the return of price into that zone. You can see clearly price mitigated that.
Yes.
Yeah, so price took out this sell side liquidity, which is an inducement liquidity. We can see how price took that out here. So we
Yes.
have, yeah, and what you can now see is bullish momentum to the upside. We have this bullish engulfing candle to the upside after price took out this liquidity at this swing low, which is the sell side liquidity. So you can clearly see that we are in a bullish market condition. So this is the sponsorship zone left unmitigated, this fair value gap here, which price return into, mitigated
Yes.
that, okay? Respecting
So
the
they would.
main,
They
okay,
would.
go on.
They, so once it become mitigated, we can't go back to that zone, right?
Yeah, once it becomes mitigated, meaning we should look forward to how price rejects from it. There are moments
Okay.
price can mitigate a sponsorship zone twice. You get it. But
Okay.
what we can see now, that mitigation was just once. Price mitigated it once. But you can clearly see that we still have a little fair value gap left then. That would be between this candle low points here and this can do high points. We still have fair value gap left. So we could see price still react at this once price return to the downside and mitigate it. But for now, what we can clearly see is that price have reacted at the fair value gap. Are we together?
Yes.
All right. So we can clearly see what we saw is now price mitigated the mean threshold. And after that, we can see this bullish candle to the upside. Price gave us this candle printed the highest high point. And what we can clearly see is that price returned to the downside, took out this candle low points. So we have a sell side liquidity sweep again here. And we can see volume here closed above this candle low points. You can see that the candle body closed above the low of this previous week, also took out the low of this and took out the low of this weekly candle. Because this candle gave us the highest point, and we can clearly see the movement of price to the downside took out this low point and volume closed above. All right, since price took out this sell side liquidity, and we've established the fact that we are in a bullish condition. So basically, you know that the draw on liquidity now is this candle high points. That is the next draw on liquidity. So this becomes your next draw on liquidity. And in extension, this other high point becomes the long-term draw on liquidity. So we have this as the first draw on liquidity that I'll be looking forward to maintain the bullish momentum to the upside.
Yes.
So you can see now from the weekly time frame, we've established the expectation because what we can see is we're strongly in a bullish market condition. Price went back to the downside, took out sell side liquidity, mitigated this fair value gap, and we had this bullish impulse. But then we can see what happened is the consolidation of price movements here. Price is failing to either push more higher or return more lower to the downside. And what we can see is the last weekly candle that was formed took out the weak low point of this weekly candle that gave us the highest high, and volume closed above it. So basically then we're looking forward to see that price now continues further to the upside. This is the expectation since it has been established that we are in a bullish market condition, and what we can clearly see is the mitigation of the weekly fair value gap.
Okay.
Yeah. So what we can now do is, since we've established these facts from the weekly time frame, you can check the daily time frame now. And what we can now see from the daily time frame clearly is price returning into the weekly fair value gap. And what you can see from the daily time frame is you can also find a fair value gap there where we found the weekly fair value gap. Are we together?
Yes.
So you see, that is a strong confluence because you can see we establish a fair value gap from the weekly time frame. And what you can see is the fair value gap from the weekly time frame also coincide with the fair value gap in the daily time frame. So you can see how from the daily time frame, if you're basing the structure just from the daily time frame, what you can see here is price took out this low point. So from the daily time frame, you can consider that you have a market structure shift. Are you getting it?
Yes.
But when you check from the weekly time frame, that is not really a market structure shift. You can see it here from the weekly time frame. We're still maintaining the bullish momentum to the upside. What price return to mitigate is the sponsorship zone we have here, this fair value gap. So let's check the daily time frame. So now after the mitigation of the weekly fair value gap, we can see also price went further to take out this sell side liquidity from the daily time frame. Price took out the sell side liquidity we have there in the daily time frame, and we can clearly see the bullish move of price to the upside after price took out this other sell side liquidity. Am I being too fast?
No.
Okay, all right. So we can now see clearly that we also have the sweep of this liquidity from the daily time frame, and price gave this bullish movements. So what you can now see, we're trying to establish this from the weekly time frame. Let's get back to that. Let me make this appear also in the daily time frame so that we can see everything we're seeing from the upper time frame. So let this also appear from in the daily time frame. All right. So let's get back to the daily. So we can now see from the weekly, we establish the drawn liquidity this high and this high. So clearly now, what you can see is price mitigated the weekly time frame fair value gap. Price gave this bullish reaction to the upside. Price returned to the downside. And what you can clearly see here is we have this accumulation. Price created this accumulation, which is also giving us liquidity. Meaning we have sell side liquidity resting here. We have buy side liquidity. And basically, when we have accumulation, we're looking forward to the manipulative movement. And what we can see, we had the bullish movement to the upside. So price took out this buy side liquidity. But since we are in a bullish market condition and we have the sell side liquidity left, so below the sell side liquidity, you have to identify the sponsorship zone below that. And what you can see is we have this fair value gap in the daily time frame.